All right, so Bitcoin is at a huge crossroads right now, and some analysts are saying a major drop could be just around the corner. We're going to break down one specific analysis that looks at the market in a totally different way, not as random chaos, but as a predictable algorithm. Let's see what it's telling us. So let's get right to it. The big question is this: could Bitcoin actually be heading for a pretty serious correction? We're talking a potential drop below that $75,000 mark. According to this analysis, yeah, the technical signs are definitely pointing that way. So let's dig into the evidence.
Now, to really get this, you got to try and think like a machine. The whole idea here is that price action isn't random at all. It actually follows a kind of algorithm, moving from one point of interest to another for a very specific reason. And there are two key concepts we need to understand to decode it: liquidity and fair value gaps.
So first up, let's talk about liquidity. Just think of it like fuel for the market. It's basically these giant pools of buy and sell orders, like the stop losses that traders use, all bunched up at key price levels. The market algorithm is naturally drawn to these zones. It often goes hunting for this liquidity to trigger a whole bunch of orders before it makes a big reversal.
Okay, next up is something called a fair value gap, or FVG for short. This happens when the price just shoots up or down really, really fast, and it leaves behind this imbalance in the chart. And here's the key part. These gaps act like powerful magnets. They have a tendency to pull the price right back to fill them before it can move on.
Okay, so what happens when we apply this to Bitcoin's chart right now? Well, it tells us something really important. The price has already gone down and perfectly filled all the recent fair value gaps below it. That means those magnets that could have acted as support, they're gone. There's not much technical structure left to stop the price from falling further if some real selling pressure kicks in. But here's the thing, right? Bitcoin doesn't just exist in its own little bubble. To really get the full picture, we've got to zoom out and look at how it's connected to the wider financial world, especially the traditional stock market. And that's where the S&P 500 comes into play. And that brings us to the S&P 500, one of the most important stock market indexes out there. If you look back, Bitcoin's price has been super correlated with it. When the S&P is doing well and climbing, Bitcoin usually tags along for the ride. And when the S&P gets bearish, it often drags Bitcoin right down with it. And this is where it gets really interesting. Right now, the S&P 500 is at a total make or break point. It just got rejected from a monthly high, and it's pulled back to this really critical support zone. So here's the bottom line. If the market's going to move higher, this zone has to hold. If it breaks, a market-wide downturn is not just possible, it's highly probable. And that would be very, very bad news for Bitcoin. Okay, so when you put all of this together, you've got the filled gaps on Bitcoin's chart, and you've got the S&P 500 sitting on a knife's edge. It really boils down to two main scenarios. Let's break down the bull case versus the bear case. So on one side, you've got the bullish scenario. The S&P 500 holds its ground and rallies. Bitcoin finds a bottom right where it is and starts aiming for those higher price levels. Then you have the bearish scenario. The S&P 500 breaks down, Bitcoin loses its current support, and the whole market flips to what they call risk-off mode. That's when investors get scared and run for safer assets. So if things do go bullish, what's the next stop? The analysis points to a pretty big number, $102,000. And why there? Well, because that's the next place on the chart where you find those significant, unfilled fair value gaps and major pools of seller liquidity just waiting. But what if things go the other way? Let's walk through that bearish domino effect, piece by piece. First, the S&P 500 fails to hold its support. That would probably be enough to push Bitcoin to break below the low it just set this past Monday. From there, the next logical target is the liquidity sitting below the monthly low, right around $80,100. And once that's taken out, the algorithm starts looking for its next target. And that brings us to the next major destination in a bearish breakdown, the price level right around $74,700. Now, according to the analysis, this is not some random number. It's a key zone where you see a ton of liquidity and unfilled gaps on multiple charts, which makes it a really powerful magnet if the market is falling. So with these two very different paths laid out, what's the analyst's final take? And maybe more importantly, what are the exact signals you can keep an eye on to see which way this is all going to play out in real time? Okay, so based on all that evidence, the analyst's personal take, their bias, is that the recent low was not the final bottom.
They believe Bitcoin will eventually trade below $80,000 again because the market still wants to go down and resolve those lower liquidity zones we talked about earlier. And the great thing is, you don't have to just take their word for it. Here are the 3 key signals you can watch yourself. Number 1, the S&P 500. Does it hold that support zone or does it break? Number 2, keep an eye on the dollar index. A weak dollar is usually good for Bitcoin, a strong dollar is bad. And finally, just watch Bitcoin's own weekly low. If it bounces hard, that's bullish. But if it breaks cleanly below it, that's a huge sign the bearish scenario is probably playing out. So there you have it, the whole breakdown of the market as this predictable algorithm with 2 very different roads ahead. All the evidence, all the key indicators are on the table. So the only real question left is, which path do you think the algorithm is going to take?